Hey everyone, welcome back. So thank you so much for coming in this early on Friday at 5:30. We have a special guest, Aydin Kilic with Hive's. He is their president and CEO. We have plenty of questions for him that I have myself, and then we'll get into your guys' questions as well. So thank you to Aydin for coming in here and taking time on his busy day. Greatly appreciate it. Aydin, why don't you tell us a little bit about yourself, how you got into this with Hive? You've been with them now for almost, what, 4 years, I think? 3-4 years?
That's right, yeah. I actually joined Hive in January of 2021. I was doing some advisory work for Frank Holmes, executive chairman, and really assisted Hive at that time with the acquisition of the GP1 facility in New Brunswick, which was a 30 megawatt site that after Hive acquired it, along with the team, it became a 70 megawatt site, our largest single site operation in Canada. It was a great journey since then. We've navigated an Ethereum merge, built our own Bitcoin miner with Intel. And in addition to that, we navigated Bitcoin halving. So it's been a lot of cool and exciting stuff. Of course, we also pivoted from utilizing our GPUs into HPC and AI compute. And that has been incredibly exciting. We recently announced that we'll be a pure play subsidiary called Buzz. So a lot of amazing things are happening in the Hive multiverse. We've always looked at energy as an input to data centers, which are really systems. And when you do that, you can realize, well, what is the best yield in terms of revenue that you can yield from every joule of energy that you consume? And you sort of have to think that way when you're mining Bitcoin with ASICs, mining Ethereum or GPUs, or even running HPC computations with GPUs, because they all have a different revenue profile denominated in energy density, right? Because you get an electricity bill in $1 per kilowatt hour, and your revenue, you really need to think of that in the same manner, right? So anyways, we can dive into all that fun stuff. My background is in electrical engineering. More specifically, I did wireless telecom. I did a bit of ASIC design. So a lot of math and physics in my time as an engineer and as a student. So I sort of apply that methodology to Bitcoin mining, how we deploy capital, how we look at Bitcoin mining as a physics equation, and really how to make Hive pound for pound what I truly believe, along with my team, is the best Bitcoin miner in the industry. We've navigated a lot of twists and turns in the sector. We're not the biggest, but we really try to strive for great uptime, good transparency, low G&A as well. You know, we sort of, I believe we have the lowest G&A per Bitcoin mined in the sector consistently, and we also have the best ROIC in the sector consistently. So anyways, I'm happy to dive into it today.
Yeah, I'll start out with this. I love the growth that we're seeing from Hive. Historically, you guys have been kind of slow to grow. You guys kind of maintained the 1% network hash rate is what you guys' goal was in the past, but this year, you guys are doing a great job growing from basically 5-6 exahash to 25 exahash by the end of the year. You guys did change the timeline a little bit on that. I think originally you guys were targeting 25 exahash by the end of the third quarter. Now you guys are saying it's going to be by the end of the year here. A little bit of a delay, I think, but not big of a delay. A couple months, not a big deal there. Still great growth here this year. And your stock is doing really good on the news that you guys are now at 8 exahash. From yesterday's news release that came out, that's fantastic. You guys are doing like an option with the Bitcoin that you guys had there and getting the ASICs. We can talk about that obviously a little bit more as well. But what's the change in what's the change in attitude towards growing more than just the 1% of the network hash rate?
Well, so a couple things. We had been searching for energy with that met scale, really, I should say, that met a few criteria. Green energy. Sorry, the camera is on reverse, so when you've got your eCam set up, so it's throwing me off a bit.
Sorry.
I want to make sure I'm not out of frame. I'm half Italian, so I talk with my hands a lot. Hydroelectric energy, ideally, but green energy, really. Low cost of power and a politically stable jurisdiction. And we always had that with Canada, with Iceland, and with Sweden. And we looked at a lot of different opportunities. We looked at doing our own wind farm in Texas, getting onto the power generation side. And, you know, some of these opportunities, when you go up the stack, or I think a solar farm, we actually had a business analytics case done, worked with some contractors, got budgeting, had a valuation done on what it would be worth if we developed a solar farm. And, you know, you're almost $2 million a megawatt on capex, and if you're going to that extent on your capex, really to get a lower cost of power at 2 or 2.5 cents a kilowatt hour, is it really worth it in the long run if you can just get power at 4 cents from utility, at a good medium voltage, without having to have that exorbitant capex? And again, it's all math, it's all physics equation, right? So if you're not demonstrating good ROI, it's almost like a vanity metric to have a really low cost of power, but you're spending a huge amount of money on capex going up the stack in power generation. So we've exhausted those possibilities, and look, there's some companies that have found great opportunities in the US, etc. But really, we found an exciting opportunity in Paraguay that ticked all those boxes. Our chairman Frank is a member of YPO. I'm a member of YPO as well. And so is the president of the country of Paraguay. So reaching out to the president of the country, Santiago Peña, really we were able to forge political connections at the highest level. And the hydroelectricity there is powered by the Itaipu Dam, which is the largest hydroelectric dam in the Western Hemisphere. I was actually there in December. It's amazing. It's a marvel of engineering. It was doing 10.4 gigawatts of active production that day.
Wow.
It feeds Brazil, Paraguay, and Argentina. The interesting thing is the government of Paraguay sells power to Brazil and Argentina. But here's the thing. They get paid in Brazilian real or Argentinian peso. When they sell power to us, they get paid in US dollars. So really, it's a currency hedge. So from first principles, it makes a lot of sense. And Hive has always been a big investor in the communities where we do business. It's well known. We sponsor the hockey team in Sweden. We do heat weeks in Quebec. And so what we've undertaken in Paraguay to show our commitment to the community is we're electrifying 18 schools in the province of Cordillera, where Valenzuela site is. We met the governor and we said, how can we help? We're here to do business. We want to do business right. And he says, well, there's these 18 rural schools and they don't have electricity. Well, we're in the electrical business building Bitcoin mines, so it's very conducive to us to support. And thus far, we've electrified 8 of the 18 schools. So when you're entering a jurisdiction where you can engage the local government, you can engage the federal government, and have a great relationship with them all. I met the chief technology officer of Ande, which is the utility company that powers the country of Paraguay, and of course sells the electrons from the Itaipu Dam. So it's really being engaged wholeheartedly and systematically in the jurisdiction where you do business. And so those were the factors, the mitigating factors that allowed us to find this amazing opportunity for scale. And we started off with a 100 megawatt site. We bought the land, we're going to build it ourselves. Again, there's these regional substations that are massive. And we came across a Bitfarms opportunity. Now, Ben is a friend, Ben Gagnon, a very bright guy, also a very technical CEO. And so when he becomes CEO of Bitfarms, there was a shift in strategy. They wanted to focus on the Stronghold deal in the US. Whereas Jeff Murphy, also a friend, also a great guy, a bright guy, it was the whole Latin American expansion that was really under his tenure as CEO. So with that shift in leadership came a shift in priorities. So it was quite conducive and almost opportunistic for us to go in, buy the site, really almost at cost. And by the time we built out the 200 megawatt site in Iguazu, we bought it from Bitfarms when the first 100 megawatts was about 95% complete. And we're really big on ROI. When we deploy capital, is that capital going to perform? Frank, as you know, our executive chairman, is a money manager. He's been in capital markets over 40 years. So for him, it's all about, is your money performing? Definitely. And so, right? So when you go buy a facility at cost, 400 grand a megawatt is what our all-in cost on the land, the substation. You've got 100 megawatts of air-cooled buildings. You have 100 megawatts of hydro-cooled miners at Iguazu. It's incredibly attractive, right? So all of a sudden we went from 100 megawatts to a 300 megawatt footprint in the country of Paraguay. And by the way, this was tucked away in one of our press releases. We actually have 300 megawatts at the at the Iguazu site. So we're building 200. That's what that ramp up to 25 exahashes. But I was at the regional 1.2 gigawatt substation. Sebastian, like this stuff is it's another level. It's beyond industrial. Like this is like civic infrastructure, right? And they're happy to sell the power to us again. You know, they actually just had a ceremony, a party in Valenzuela in the region of our 100 megawatt site to announce a commissioning of the substation last weekend. And our country president, Gabriel Lamas, who was there with the country president, Santiago Peña. So they're very welcoming, right? You want to do business where you're welcome. And so that's another great reason that we're so thrilled to be in Paraguay. And when I was at that 1.2 gigawatt regional substation, it was massive. It was the biggest like I've traveled a lot, I've seen a lot of Bitcoin mines around the world. It was the largest substation I've ever seen. It was crazy. And we have our own exit bay dedicated that's named after our company and our local subsidiary company. The line, a 300 megawatt exit bay, is named after us, and so we've got up to that. Nice. And so yeah, so there's all this great growth potential. Our operating partners, our contractor, they're great. I've been down to Paraguay twice. I'm going down again in a few weeks. Super excited. So yeah, it's just been about scaling with intention. You know, Hive is.
You guys typically are looking for these hydroelectric plants, right? I mean, that's kind of what your whole motto is, I guess, is going into those sites where there is plenty of hydroelectricity, get access to it, and work that way. So that kind of brings a couple questions from that alone. Number one is, you guys have posted a picture of security guards helping out with the shipment of ASICs. That got me thinking a little bit, maybe wrongfully so, but what's the political stability in that country, in Paraguay there? And is there concern for, obviously there might be some concern for things being stolen. How much is the crime, a portion of your business, not really fear, but just concern there?
Yeah, I'm glad you brought that up because it's funny. I saw your video and I saw that you questioned the photos. You're like, I might not have done that if it was me. But and that's why thank you for having me on the air. It's great to be here, by the way. We love your content, and we think you're an amazing analyst. Frank's actually a subscriber to your Patreon. So, you know, so thank you for welcoming us to have the dialogue. So we actually thought it would be great because it shows like those are state police, right? Like if you look closely, it actually says Itaipu. So, you know, that region has, you know, there's state police and regional police, state troopers, if you will. It's probably the best analog to think of it. So it's really showing how, you know, the regional government was welcoming. It's like, wow, these guys are investing and importing hundreds of millions of dollars worth of equipment. We're sort of rolling out the red carpet. It's like a police escort, like a procession. Okay. And I think that there had been, you always sort of hear, I think there was a story about, you know, a French guy that had been, you know, robbed or whatever. And you know, just all over the world. And there's these hijinks, but we're actually trying to show how secure it is because we've got that level of welcoming and security and backing. So everything, you know, has been great. And you could see that the hash rate has been coming online. Like we're bringing a lot of ASICs into the country. We're actually the largest foreign importer this year in the country of Paraguay.
Oh, wow.
As we've been told. And we also will be Ande's largest customer. So it's about operating at, you know, at a very high level, a very professional level. So yeah, we thought that people would get a kick out of it. And yeah, it's just, I think if you're going to be having a lot of ASICs really anywhere, because when you look at the quantum, like just fun math, right? Fun math. If you go onto the Bitmain website and you look up what new generation miners, pick a model, doesn't really matter. Just rule of thumb, maybe $15 a terahash. We got them for cheaper than that, but anyways.
Very nice.
If you know, what's an exahash? An exahash is 1 million terahash. So every exahash is $15 million, right? So if you're growing from 6 to 25 exahash, you're bringing online almost 19 exahash. So what's 19 times 15, right? Like that's a lot.
Yeah.
So it's almost $300 million. And so you're bringing in hundreds of millions of dollars worth of ASICs into the country. And so it's just a good show of stewardship. We are managing shareholder capital. We also want to make sure that there's no delays and that things are imported, installed, and they're hashing in a good timeline. And by the way, we end of Q3 is end of September, and so in terms of the timeline, just providing I think sort of in the interim messaging, it was energizing. But to bring all the machines online sequentially, we just put it to, it's sort of October, November is the practical working target to have the full 25 exahash online. But in terms of energizing, it will be September. And similarly, we energized in April our first 100 megawatt site. And then you bring on miners every week. So we're bringing on an exahash every 2 weeks is what we forecasted to the street in one of our recent press releases. And so if you think about that, that is almost, so that's 2 exahash a month. That is almost like roughly, I mean, really rough math, right? 8 exahash are roughly 1% of the network. So when you bring on 1 exahash, you're bringing on half a Bitcoin a day of production, right?
Yep.
So 2 exahash per month is a Bitcoin per day of production, right? So we're adding on 30 Bitcoin per month of production every month over month. So we'll be at close to 10 Bitcoin a day of production by the end of the summer, which I think is really exciting. That's almost $1 million of daily revenue, with Bitcoin being at 100,000. And yeah, difficulty might go up, but we also saw a big correction. We saw hash price sort of defend a floor in the low 40s. And I think, it's obviously better now. I believe it's closer to 55. So yeah, sure, network hash rates go up, but just to give an indicative example of our production and where it's going to scale to, it's really exciting to be doing 10 Bitcoin a day, within a few months here. So I'm very stoked about that. And we also put in that press release that phase 2 is well underway. We get a lot of questions from analysts and really smart industry observers such as yourself. Where is the industry, phase 1 is great. Okay, good. You're getting to 11.5 exahash. Amazing. What about phase 2? Well, we let them know the long lead time items, namely the containers. They've been shipped. They're going to arrive in early June. So we wanted to let the team, or really let the street know, and all the teams of analysts out there, that the infrastructure build is well underway. So I'm really excited about my visit down to Paraguay in June, and we'll be sharing photos and all sorts of fun content from there.
That's great. And then when you talk about containers, you're talking about the containers that are liquid cooled from Bitmain, right? You guys are putting those in. Is that the case?
Yeah, the S21 Plus. So we did announce in December a landmark purchase of 8.6 exahash of S21 Plus, 15 joules a terahash. And I believe in December, we did state that we got them for $14 a terahash, which was a phenomenal deal.
It is, yeah. And you guys have an option to buy more, right, at that same price.
Bingo, right? Bingo. And so we didn't get too specific, but what we did say in our last press release, I really liked our last press release because we were waiting to really perfectly orchestrate the plan and then boom, unveil it. And so again, investment banking research analysts, they're like, okay, have you put deposits on the machines? Do you have orders for the machines? How's all that? Yes, it's all we've fully funded the 18 exahash. So what's 18 exahash? That's the first 200 megawatts. So phase 1, it's all in the press release, but just to summarize it for everybody, phase 1, the first 100 megawatts gets us from 6.5 to 11.5 exahash. Phase 2, the second 100 megawatts gets us from 11.5 to 18 exahash, and that'll be done July, August, right? And that's been paid for. The ASICs are coming in weekly, right? So that's a flywheel, if you will. And that second phase are the Bitmain S21 Plus Hydro. So when you look at 15 joules a terahash, $14 a terahash, for a guy like you that has really good Excel models, you know, the ROI profile on that is phenomenal.
Yeah.
Then you add on to the fact, like when we were underwriting that deal in December, I think we were after, we always use 5 cent cost all in, just incidentals, electricity, right? Just good for your model. Mm-hmm. You could put 4.5, you could put whatever, but if you just use a conservative 5 cent OpEx, you know, and by the way, like just a note on that, I think that there's this culture of companies like hyper focusing on one thing, like, oh, you know, our energy costs one quarter was just, we have 2 cent Canadian power in New Brunswick right now, but that's one part of our portfolio. But I don't go around banging that drum, only saying that, and like, what about companies with cheap electricity but like insane executive compensation, or like got like 300 employees? It's just kind of like let's have an honest conversation, right? So, anyways, put 5 cent in the model. I think it was like an 11-month ROI after costs, Sebastian, if you assume a 5 cent per kilowatt hour operating cost, which is amazing. Mm-hmm. Which is amazing, right? Like some of our peers buy, like there's two schools of thought in crypto mining, right? And tell me if you disagree, because like I enjoy the dialogue. There's ROI focused, where you're solving for a mathematical equation. What is the lowest number of days in ROI on capital deployed when you buy ASICs, right? Your 5 input variables are dollar per terahash, joule per terahash of the ASIC, Bitcoin price, difficulty, you don't control those, and then your dollar per kilowatt hour electrical price, right? Yeah. And from that, you can succinctly and mathematically determine exactly what your ROI will be. Now, of course, difficulty and Bitcoin price change, and you can run time variant things, and you can do signal analysis, and you can do more elaborate mathematics, but like the 5 inputs determine ROI. And that's what we did, right? Because we really
too. I mean, you got to include uptime in there as well. You could have everything else great there, but if your uptime is crappy, your ROI can be crappy.
Yeah. And by the way, you know, we modeled 99% uptime because we're pretty much at 9. We have great uptime. But you're right. Yeah. So some guys, you know, might not have that 70, 80, 90% uptime. And so we really try to, because we grow by building, right? We reinvest mine Bitcoin into assets, right? We haven't taken on any expensive debt. And so we've grown very accretively. And so we've really tried to like stack our sats and scale sustainably, not just, you know, dilute like crazy, borrow expensive debt, you know, pledge. Like in 2022, you know, the Celsiuses of the world, the FTX of the world, think of all the like NIDIG, think of all the predatory lending that happened. And Argo went bankrupt, CORZ Scientific went bankrupt. I mean that, like, no disrespect, like I think CORZ, Adam Sullivan, the new iteration of CORZ is incredible. But previous management, they went bankrupt, right? Like
a lot of companies did. Yeah, they had a problem with the debt that they took on at that point, and Bitcoin going down in price definitely killed a lot of these guys.
Exactly, and we didn't take any of that debt on, right? So efficiency isn't just our mindset. Sorry, isn't just our metric. It's like our mindset. You know, it's
got to be the thing that drives you.
Exactly, and so that's our school of thought. Now, the other school of thought is just print as much hash rate as possible, as much scale as possible. I remember a banking analyst, good guy, but this was a few years ago. He's like, you just need to put a bar chart showing your hash rate growth. And as long as you have a contract and partial deposits, I can take that and run with it. And so a lot of our peers have just pursued scale at all costs. You follow that, and you know, these are the guys that are buying the S19 XP or the S21 XP when, man, I remember in 2021, I think new ASICs in the bull market were going for like 80, 90, $100 a terahash.
Yeah.
People were paying for that. It was crazy. You're never going to ROI. Never. Like we've never bought XPs brand new. I think even now, like XPs are $22 a terahash or whatever, or $21.50 a terahash. So they're 40% more expensive than a plus, right? S21 plus. Mm-hmm. But they're only 10% more efficient. It's just like this is linear algebra. It's not that complicated. Like clearly people aren't doing the math, or they don't care because they're just like it doesn't matter. Just give them another sugar rush. Retail investors are going to get pumped up. Like, whoa, they got the best new machines. and you're just going to overpay for your ASICs. You're not really going to ROI, and you just prematurely upgrade. But here's the thing, and you'll understand this, and please tell me if you disagree, but like, if you just get on that hamster wheel of like prematurely upgrading your ASICs, what can you do? Vanity metrics. You can make your gross mining margin look great because you always have the newest best machine with the best joule per terahash efficiency, right? We could just go upgrade our ASICs pull them off the rack. New year, new model, new ASICs. Then when you look at our quarterly financials, our gross mining margin is going to look incredible, right?
Yeah.
But you haven't repaid your original investment. And I think that's the thing that's really hard to track. It almost requires transparency and self-reporting by companies, you know? And I'd love to hear your thoughts on it. And so what happens is we run our machines until the end of the economic life cycle. Why? Because that's how you maximize ROIC. But what happens at the tail end of the economic life cycle of any ASIC? Well, its margins shrink because it's approaching the end. So while you may be free cash flowing, your margins for that interim period, sorry, again, this reverse camera thing is tripping.
They're shrinking, yeah.
Yeah, they're shrinking. Yeah. So your gross mining margin may look low, especially on a peer compared basis, but you're actually free cash flowing. Yeah. So how do we get that out there? How do we get that? And so...
So when you guys depreciate your machines, are you depreciating for 3 years then? 2 years. Okay, wow.
Really harsh, yeah. And so, you know, there is, it's in some of our decks, but we do really lead the industry in ROIC. And that was done by, we've had third-party analysts do it for the whole sector. I think last quarter we had 42% annualized ROIC, 13.7% ROIC for the quarter. And you know, the rest of the industry was anywhere from 2 to 4%. We're at 14. So it's our approach. Yeah, but like clearly we're not getting the value for that. But the other school of thought, when you just get as much scale as possible, and who cares about ROI, just get new machines and like pay $1 million a megawatt for sites, who cares, just grow. What happens? It's the antithesis of what you represent, because you represent thoughtfulness, careful analytics. Once you get to a certain size, you just get indexed. You get on the Russell 2000, you get into ETFs. It's passive. They're non-discretionary, right? What do they need is liquidity and market cap, right? Your stock price has to be over $5. You got to trade X million shares a day. So as long as you get to that critical mass, it's almost like just like quote unquote, dare I say, too big to fail. And that's the power of like passive buying. And so that's sort of like what we realize. And so we're like, okay, we've got to scale, great. Let's scale sustainably. And that's what we're doing in Paraguay. But that's really like the outlook. But so I'd love to get your thoughts on that.
No, and I kind of agree with you there. Some of these guys scale at all costs, right? Whatever the cost is, they're going to scale, whatever that is. Others are taking a little bit different approach, but I think scale is also important because it does help with the other costs that you have. SG&A, everything else becomes down much smaller percentage-wise of your revenues if you can scale. The challenge is obviously getting to scale, and whatever that scale is going to be for each company is going to be different depending on your overhead, right? So as long as your overhead's kind of low, you guys might be able to get to scale with 25, 30 exahash, right? That's going to be a great maybe number for you guys there. For other companies that have maybe higher SG&A, the scale is going to be higher. It's going to be 50, 60, 70 exahash, whatever it's going to be. And for some even maybe even higher. It just all depends on the cost that you have associated with it. What is your uptime on the machines, right? How that all goes into how quickly you can get an ROI on those machines. You guys are doing it for 2 years on a depreciation model on it, which is really aggressive. We've seen others that are doing it 3 years, others doing it even 5 years. I think 3 years is kind of a good spot. If you can get 3 years out of a machine, that's actually pretty good. But yeah, I mean, we see companies dilute like crazy in order to get to scale. We've seen this number of shares just be like an ATM. They just go to the ATM, get the money, they grow out that way, right? So that's one of the things I also want to talk to you about today was you guys came out with this kind of option plan with using the Bitcoin that you guys have to purchase the machines, which is also something we've seen from another miner as well do this here recently. It's something new that I haven't seen before, so that's kind of interesting. We had a member of my Patreon asked this question here. Can you elaborate on the call option for the roughly, we don't know exactly how much you guys put down, roughly around 1,600 Bitcoin at 87,000, as many details as possible about this, and who is the counterpart? Do you need to repurchase all of it at once? And is there a date when the options expire for those?
So this is an AMA, but I can only answer the things that I can answer, and I'll respectfully not answer things that we haven't disclosed. So we've got a very attractive deal. We're very proud of the deal, and there's aspects of the deal that we don't want to necessarily disclose. But what's most material is the $87,000 purchase price, and there's no debt, there's no interest that we're paying to hold this. I could say that the option window that we have to buy back the Bitcoin is substantively longer than our peers. One of our peers, I think recently there was a Minor Mag article that commented on, I'm not going to name any names, I think you've got a very astute and dialed in viewership, so I'll just talk categorically, and I'm sure people would figure it out. Had a 3-month, and ours is longer than that. Time is money, right? And so we are, obviously with Bitcoin being at 103,000, it very much was an accretive and successful structure, so to speak. And we can't say who the counterparty is, because obviously our peers would just love to go and try to ask them to do a similar sort of deal. But we looked at the whole industry. We talked to a lot of different types of counterparties, and we wanted to rebuild our HODL, right? Like our HODL strategy isn't just about Bitcoin; it's about conviction, discipline, long-term value creation. So can we utilize that HODL in the interim to accretively grow and bring on our exahash and lower cost of capital, earn a better multiple in the capital markets, because we're targeting a $1.5 billion US market cap once we're at the 25 exahash, and then be able to buy back our Bitcoin at a lower cost of capital. That's the goal. That's the vision, right? Yeah. So if our goal is to get to 25 exahash and have a share price of, call it $10 and be a $1.5 billion market. I'm using rough numbers here, indicative, right? Trust me, I spend a lot of time doing very precise and detailed analytics in my spare time, and Excel, etc. But just broadly to explain how we see it is, if we can get our cost of capital down by scaling to 25 exahash for our stock's $10, and we're a $1.5 billion US market cap company, and we can buy back Bitcoin at $87,000. I mean, where do you think Bitcoin will be at this fall?
Me, I think we're going to be probably closer to 125, 150.
I agree, my friend. I agree. I think that the bull market hasn't truly shown up yet. I think that this go around, I think a true bull market would be anywhere from $80 to $120 petahash per day hash price. I think that on a cyclical basis, you look at last halving, we saw in 2021, the bull market, we saw hash price get as high as $300 to $400 a petahash a day. Now, obviously, with the commodification of hash rate, we produce more hash more cheaply. So, I think people have commented it's usually 3 to 5x pre-halving hash price, right? So, all things and just adjusting for hash rate commodification, I think that $80 to $120 hash price would be like the real bull market. We're at about 55 right now. So I think 150 it would be great. And it's also how long does that last, right? Because we saw the last bull run in 2021 kind of went into 2022 a little bit too. If you look at that as anything with $200 hash price and above, I call that the shoulders. That was actually 16 months. And the head, when it was over, I think 300, well, it was kind of a little bit in February, a little bit in November. So what does a timeline as well as the peaks look like? I mean, that you can really just converse about. Nobody really knows. And so anyways, having that optionality to buy back our Bitcoin at $87,000 if Bitcoin is at 125 or 150, and get our HODL back to over 2,000 Bitcoin, and we have 25 exahash.
That's great.
It's huge, right? So that's like the real upside here. So we're hoping that the smarter minds in the space, such as yourself, once we can that's why I wanted to come on the air and sort of connect the dots, right, for people. sometimes it's a delicate balance, because we felt that overtly explaining our methodology and strategy, sometimes peers will copy, right? Like you look at our HPC strategy, we were the first to monetize our GPUs, because by the way, we were the largest Ethereum miner. Yeah. I think we were 6% of the network at our peak. We had 120,000 GPUs, 120,000.
You guys were making a lot of money off of that.
Yep. Right. And then we took 400 GPUs and got to $1 million ARR, and scaled it to 4,000 GPUs and 10 million ARR. And we'll be at 20 million this quarter. Right. And so we did that in 2 years, on a B2B model, maintaining our lean G&A. Big shout out to my team. I'm very proud of what my team has accomplished in the last 2 years, navigating an Ethereum merge. Everybody counted us out. And the thing is like what people need to realize, like crypto mining is asymptotic, right? Like it's not like 1, 0. So after, like we talked about the ETH merge just for a little bit, going into the ETH merge, right? We had 2 types of GPUs. We had the NVIDIA ones that we're running to this day, right? And we had the AMD ones. The AMD ones, they printed money 4 times over. They ran from 2018 to 2022, right? Like 3-4x ROI. Awesome. Those things were doing anywhere from 35 to 40 cents a kilowatt hour, mining Ethereum, sort of in the bull market. And then the NVIDIA cards were doing 90 cents a kilowatt hour in the bull market mining ETH. Now, after the merge, all of that, and I mean, those were like the peak levels, and it was sort of about half that when going into the merge. So if, like, even the best cards were doing 45 cents a kilowatt hour, the NVIDIAs, and then the AMDs were doing 25 cents a kilowatt hour. After the ETH merge, what happened was the cards collectively were doing about anywhere from 4 to 7 cents a kilowatt hour, which is not zero, but it's not as lucrative, right? And so our NVIDIA cards are doing 7 cents a kilowatt hour. Well, guess what Bitcoin mining was right around then with new generation ASICs? It was like 9 cents a kilowatt hour. It wasn't that far off, right? And so you think about our cost base in Sweden, this is like before the energy tax, like our power cost was like 2 cents. We still had healthy margins, but people are like, oh no, they're done. It's like the Ethereum merge, like we never got a premium for it. So right away we started mining altcoin, like getting 7 cents a kilowatt hour. So pretty good. And then boom, we got into the HPC stuff. And we started earning on that $1 a kilowatt hour. It was even better than ETH mining, right? And then our peers started doing it. And so we built our own. One thing that people may have tried to copy, but they couldn't because it was really hard, but it was successful, was building our own buzz miner. We built an exahash worth of ASICs. They basically were S19J Pro equivalent, 100, 110 terahash, about 30 joules of terahash. By the way, that was another one you were like, oh man, they told us buzz miners, but I had to look through my notes. It's 110 terahash. You are right, my friend. You're a very good analyst. Sorry, we should have put that in there to help clarify. To me, it's just like, it's a buzz miner. It's 110 terahash, 30 joules. Like, I know that, but not everybody off the top of their head will remember that. So
luckily, I had all my data. I'm like, okay, I know where these are. Put those back in. Those things are howling away.
Right. And so, I think Intel gives an allocation of chips because we had green energy. That was a big condition precedent. So, and again, it was an allocation of actual ASIC chips. We call the block scale, and you have to do the system integration. Well, I worked in wireless telecom. I understand system integration. And when I was in wireless telecom, we build broadband cellular devices, 14-layer PCBs, highly compact, highly complex. And so that's, your factory engineering. Hardware design, firmware, it's multifaceted. And so we took that methodology. I hired a QA engineer from my wireless telecom days, flew him to China to the factory. We used Intel's reference design to optimize it very much. And we were the only one. I think it was Block, which is, Jack Dorsey's company. Yeah. Argo went bankrupt, and then Grid, I think it was a SPAC deal, never saw the light of day. And none of them could pull it off and build a working system. And we built over an exahash. And those things have, we had 3 batches of them. 2 of the batches fully ROI'd. One of the batches is almost fully ROI'd. And we're going to send them all to Paraguay to just, because they're still profitable. So we're just, like, we own them, right? Like, we fully depreciated them. We literally just you're literally leaving money on the table by not sending them to Paraguay. And by the way, we're looking at our capital allocation, which we do religiously. Like, we're very quant-driven at Hive. And we were just like, okay, well, we have 30 megawatts of buzz miners that we could send, and we could have really, really good ROI and continue free cash flow. Let's do it. And it saves 27 million of capex if we just bought new gear,
Sure.
So that's why I made
all of them that you guys had. Are all those now in Paraguay?
Yep. They're all in Paraguay. Yep. And because what we did is we did a deal. We bought Canaan ASICs in, I guess it was like 7-8 months ago now, in the fall of 2024, and we press released it. I think it was 11,500 Canes. We got a phenomenal deal. Canaan didn't want us to announce what the dollar per terahash was, but we could say it was sub 1 year ROI after 5 cent costs, based on hash rate economics at the time. So it was great. And we're like, okay, perfect. We are approaching end of life. Like, so you got to, timing it is an art and a science, right? Like, you do the math. You're always looking at where's hash price, where's ROI based on variables, but what are the offers in the market? And so sometimes you just got to strike while the iron's hot. And we're like, okay, let's buy these. We bought them in 3 batches, totaling 11,500. We're like, you know what? We can upgrade our older machines, and if hash price comes back, then, because keep in mind, this is like post-halving 2024, hash price is not great. We're like, you know what? We'll upgrade them. We want to have healthy mining margins, great ROI on these ASICs. And our older ones, when hash price recovers, we'll be able to plug them back in, and boom, Paraguay comes along, send our buzz miners down there. So it worked out super nicely, and I think we're going to be doing really great margins. We're going to be mining a lot of Bitcoin. I'm excited to get the HODL back up, and so I don't know, any other questions we've talked about?
I got a lot of questions, but I want to know how much time you got left. I don't want to hold you up too long.
No, this is good, man. It's 4:17 p.m. in Vancouver. It's, hopefully you have got more guys tuning in on the live. How many people are on your live stream right now?
Right now, 50.
50, awesome. So, hopefully more people are dialing in. They're getting off work. They're enthusiasts. They love mining. I'm here to answer questions. Ask me anything. I hope I answered the questions for the guy who asked those. They were smart questions, by the way.
Yeah, I think you did. I mean, you answered as best you could from what you are able to do. So that's all we can ask, right? I know there's some things that you are not able to share with us, which is fine. Other questions that are going back to the HPCI business. You guys in Q3 reported about, I think it was $2.5 million in revenue from high performance computing.
Yep.
We are still waiting, obviously, for Q4. I think that results are going to be coming up, I'm guessing, in a couple of weeks, because it's the end of the year, so those have to be audited and all that stuff.
So basically, the 2.5 a quarter is 10 million annualized, right? And so our fiscal year end is March 31st. And so we'll be announcing that on our filing deadline's end of June. So it'll be sometime before then that we file. So, give it 4 to 6 weeks. That's why there's that latency. A lot of our peers, I think, reported this week because they have
this week and last week, yeah, because they have regular quarterly results. You guys have the fiscal year end. It takes a little while to get that done.
Exactly. So that's the difference there. And we did mention in a press release that we hit 13 million ARR. So we gave sort of an interim update in one of our production releases. But all I can say is we're well on our way. Our target is to hit 20 million ARR by end of June, and we are very much well on our way. I'd go so far as to say I think we'll be ahead of schedule on that, but stand by for the official announcement.
Okay.
And yes, it's going very well.
Nice. Now, when you guys are dealing with customers for high performance computing, are there, I'm guessing, smaller customers, right? You're not dealing with too much with hyperscalers. What are you seeing in the space right now? We're seeing that there's a lot of demand for HPC-AI, but we're also not seeing a lot of that convert over into actual contracts with a lot of the miners that are going into HPC-AI. I mean, we're seeing that also happening here, which is kind of unusual, I guess, being that we've been mining for so long and all of a sudden, overnight, things just switch on us and people are going into HPC-AI, pausing Bitcoin mining. So where do you see this all playing out right now? And then, can you share a little bit on what you guys are experiencing?
Yeah, so we operate at a 2 tier 3 data centers in the province of Quebec in Canada. And so we've got H100s, NVIDIA H100s, H200s, and we've got our A series cards, the NVIDIA A40, the A6000, and the A5000. And then we also have a cluster in Stockholm, in Sweden. So we've got 3 clusters operating. Collectively, it's about 5,000 GPUs. We have 504 H200s. We have 344 H100s. And the balance are, so it's about, 850 H series NVIDIA cards. And then the balance, a little over 4,000, are A series cards. Again, the A4000s, or sorry, A5000s, A40s, and A6000s. And so that's the makeup of the cards. And like I said, I think it was a month and a half ago, before we even plugged in our H200, plugged in as an understatement. I mean, you build a cluster, you build the networking, there's InfiniBand. It's very different than Bitcoin mining. And they're physically different, right? Like, they're not co-located. Like Bitcoin mine, Frank always likes to say, he goes, a Bitcoin mine is like a Ford F-150 truck. It's rugged. And an HPC data center is like a Ferrari. It's very refined and polished. You've got redundancy, temperature control, etc. Yeah. So anyways, our Bitcoin mine is Lachute, which is an hour from Montreal, right? It's a town of Lachute. So 30 megawatt Bitcoin mine. It's an hour from where the tier 3 is, right? So physically different. And I think that's something important to note. I think that we actually are vertically integrated, right? We build data centers, we operate data centers, we run our ASICs, we prop mine, we self mine. But we're also building and running the GPU clusters, right? Whereas I believe some of our peers are in the business of creating some tier 3 rack space. And really all you're doing at colo, like rates are whatever, I'm using really rough numbers here, 150, maybe $200 a kilowatt a month. It works out to something like 25 to 30 cents a kilowatt hour. And that's what you're selling. So the ROI on that, if you're spending $10 million a megawatt on building tier 3 data centers, like an 8-year ROI. Now some guys are like, oh, but we could do it for cheaper. And we're like, okay, but like, you Vantage Compass, like these companies are like super professional. It's like roughly the market rate. And are you going to be able to deliver proper tier 3 with redundancy for much less than that? I mean, in some cases you can, right? I think companies like CORZ can. They're very proficient, and they got a huge power portfolio. And when you've got the high voltage and the distribution, the electrical stuff, you could do it for maybe like 5 to 8, which is what we're able to do at some of our sites. But then you're still really just selling colo. But the other thing is, okay, if you're selling co-location space for 25, 30 cents a kilowatt hour, and then who's renting? Okay, somebody's going to go rent the rack space and maybe build a GPU cloud or a conventional cloud. But if it's a GPU cloud, well, alluding to what I was talking about earlier, and the currency of dollar per kilowatt hour, which again is, I think, the most pertinent way to measure your revenue, whether you're in the Bitcoin mining business or broadly the data center business. So H100s are doing, I would say, I mean, it depends if it's on demand. So we have a B2B model. We work with different GPU marketplaces, and we have bare metal contracts where we rent a cluster for, weeks or months at a time. But so if you got a fixed contract for 3 months or 6 months, the rate will be lower than on demand. We're renting it for hours or days. But anyways, so just really rough numbers. H100s are roughly $2 a kilowatt hour in revenue, and H200s are about $3 a kilowatt hour in revenue on demand. So you could see that it's much higher. It's an order of magnitude higher than selling the colo. But then you're also investing in the GPUs. So when you do all the math, you're somewhere in a 2 to 2.5 year ROI on your GPUs if you're actually renting the GPUs to people that are running AI compute, what have you. On
a shorter time frame, right? If you get longer contracts, you're looking at maybe then having an ROI even longer, maybe 3.5 years on those potentially, because you're obviously decreasing the cost for that customer there a little bit as they give you a longer contract, right?
Correct. And I think what's worth mentioning is that when you have new, like I heard through the grapevine, B200 renting for $7 an hour, a couple months ago. And so, but like it's like a melting ice cube. It's a slower melting ice cube than Bitcoin mining. But like, I think H200s, or I mean even H100s, right now you could rent them for $2 an hour on demand, and I think fixed contracts are less, like $1.25 for 6 months, right? Something like that.
Yeah.
To give you flavor. But 2 years ago, a year and a half ago, it was $3, right? So it's quite a bit higher. So whether you do, my point is whether you do it on demand or whether you do it fixed. If you do it fixed, you're locking in your price. You know your ROI is very reasonable. When you do it on demand, your margins will be higher, but that on-demand price will atrophy with time. But roughly it's somewhere like a 2.5 year ROI. However, this is the big however, and that is the GPUs still have good market value. Like if you repay your GPU in 2.5 years on ROI after costs, the GPU is worth probably half of what you paid for it. You know what I mean? So there's still a lot of equity value. It's not like Bitcoin mining ASICs are like, oh shit, we bought them for $14 a terahash and we're going to sell them for $3 a terahash, which still is not zero. It's always asymptotic. People just seem to like, if you when you do mathematics, you think of certain functions, an asymptote, something that approaches zero, never quite gets to zero. So anyways, that's a one thing to keep in mind, but this is where it's pro formas, it's all math, right? So do the math, let the numbers speak for themselves. Are you ROI? Like ultimately, if you are not making money, if your investments in GPUs or ASICs are not accretive, like if you're mining Bitcoin with ASICs and you invest $100 million, and over the life of those ASICs, if you run them, by the way, we depreciate for 2 years for accounting purposes. But we run our ASICs for as long as possible. We've run ASICs for as long as 4 years plus,
Wow,
so
okay.
I want to make that very clear. No, we run them for as long as possible. That's the art of mining. But, if you're mining and you don't actually make more money after costs from operating your ASICs, you should just be buying Bitcoin. To go be MicroStrategy and just buy Bitcoin,
Exactly.
But there's also Michael Saylor. I think Michael Saylor is a great guy. He's an amazing thought leader for the Bitcoin space. I saw him speak in Miami at the Cantor conference, and he said that MicroStrategy, they refine capital, crude capital, which is fiat, into Bitcoin. Yeah. And he said much like a oil refinery refines crude oil into jet fuel. So you're not paying for the book value of the jet fuel, you pay for the refinery, right? So that was a very clever narrative point.
Analogy, yeah, that's definitely okay. Yeah, I mean, going back to just the mining economics and things, I started mining with a friend of mine. He invested a bunch of money into a mining farm that I helped him manage for about 7 years, 2017 to 2022. So about 5 years, we were still running the S9 miners for about 5 years at certain times when it was profitable. And when it wasn't profitable, we weren't mining. But the Ethereum mining, that whole time, whether it was a bear market or not, that was always profitable. Those things always kept the lights on in the warehouse. So just something that I've learned over the course of that, and that's kind of how I've gotten into the space as well. And I know there's also times to get into Bitcoin mining and not times to get into it. You don't want to get into a bear market. There's times when you want to build out and times where you don't want to build out.
Exactly.
Yeah.
Well, you're asking some really, really great questions. So let's take it back to the S9. Like I'm sure you've got some like old school Bitcoin miners, real enthusiasts that have followed the sector for a while. So let's take it back to S9. The S9 did 13.5 terahash and consumed 1,323 watts, at least the iteration. I remember very well because I'd founded and took public a company in 2017 when Hive went public. I was inspired by Hive. So Hive was the first public crypto miner ever. Okay, it's an Ethereum miner, and they had a
company that I invested money in a Bitcoin miner. So it's kind of fitting that right now I'm doing my first interview with Hive again.
Well, let me give you some interesting history. It's very cool to know that. I hope you made money, by the way.
I did.
Hive had the inaugural press release. It said they would have done an EBITDA, trailing 12-month EBITDA of $7 million with Ethereum mining operations they had. And I was like, well, that's really interesting. So I went to etherscan.io. This is in 2017, and I downloaded all the network analytics from Etherscan. I'm like, how many GPUs and how much ETH hash would you need to make $7 million after, a nominal cost? And the number I remember is 10,384 GPUs, which would have been roughly 2 megawatts. And I found an old Business Insider article with Marco Strang saying that, because Hive originally was Genesis, saying that they had 10,000 GPUs as a photo of the hangar in Iceland. And I was like, I got it. It's 2 megawatts. My math is right. And so then I found an opportunity in the US. It was a 2 megawatt Bitcoin mine. I raised some capital. Raised $20 million, took it public. Fidelity was my big shareholder. Company is called Fortress Blockchain. Ended up handling a succession plan over to a couple guys that rebranded to Cathedra. But anyways, more importantly, because I joined Hive and I want a succession plan for the company I started, we mined through the halving event of 2020. And then I remember getting the audit done for 2019 and 2020 going into the halving, and never mind hash price, but if you look at the dollar per kilowatt hour revenue of the S9 post halving of 2020, it was low as 3.5 cents to 4 cents a kilowatt hour, not hash price. I'm talking dollar per kilowatt hour. And fortunately, we had 2.5 cents power back then in 2020 in Washington State, Grant County. And so, oh man, I remember it was actually July. It was the halving was in April, but July is when the mining, because you had COVID too. Like, it was such a crazy time, right? Yeah. Like, you had Bitcoin drop to $3,500 on March 12th, and then you had the halving in April, and it was July and September when hash price really took the worst hit. And I remember having to write a dissertation for the auditors and sifting through like the daily data. But yeah, that's the thing. And it recovered, Sebastian. It recovered, And then what happened? Well, guess what? Bitcoin hit $10,000 in December 2020. And then it hit $20,000 in January, right? And then in 2021, things just took off, right? I think we hit 63,000 in February and 72,000 in November. So all of a sudden, guess what? Your S9s can make money again. So like, it's very important to have lean G&A because our lean fixed costs, because you can't really control those. And if your hand is forced to shut down, it's pretty tough to start back over again, especially if it's like 6 months later. So if you can eke out like just a small margin or even break even, because what you're doing when you're doing break even, if you hodl, you're just paying your cost to acquire Bitcoin at the same cost. It's just or you just mine and sell. Like the guy, like before capital markets, like the guys that I learned Bitcoin mining from, they've been mining at industrial scale since 2013. They would always mine and sell what they needed to cover costs and hodl the rest. And at Hive, we have a hybrid strategy, right? And so, anyways, to your point, you very much, the hash rate economics are very fluid. I almost wish I could do a screen share because I love analyzing this stuff, and it's actually really fun for me.
Yeah, I mean, I love looking at the data and everything else, see what's looking like. But I don't want to keep you too long. We still want to get into the viewer questions here. A couple more questions that I have for you really quick, Aydin. Let me see, what was this? Let's see here. Talked about that already. We covered those. We covered a lot of topics actually already that I had questions on. Oh, the recent ATM. You guys posted that as well earlier this week. That gives you guys another 120 million, I believe, roughly, to pull on that, correct? Is that my understanding on that one?
Originally, we had 300 million on the base shelf. We did a $200 million ATM. I believe it's Stifel, Canaccord are in the syndicate along with B. Riley, Roth, and Northland. And, we have great liquidity. And so it was just about extending the ATM to coincide with the original size of the base shelf. That's all. So it was kind of normal course of business. And, but moreover, we also announced that we had pledged the Bitcoin to fund our scale. So yeah, again, it's about having a hybrid strategy, right?
Sure.
And what is our lowest cost of capital? What is the best way to scale? Hive, it's like we operate across 9 time zones, and can you believe this? Our team speaks 5 languages, right?
Holy cow.
English, French, Swedish, Spanish. And so, but the one common denominator, the one truth of that is Bitcoin, So anyways, how can we really accretively accumulate Bitcoin as a business, mine sustainably, have data centers that will stand the test of time? Our facility in New Brunswick, in Quebec, Rami, our site captain, he built that in 2016, 30 megawatts. Can you believe 30 megawatts in 2016?
Wow.
It was the largest facility in Canada for years, and still running to this day. So it's we have a built to last mentality at Hive. Again, we live it. We're the longest standing public crypto miner. But anyways, that's just a color for you.
Other question is, what are your expectations on your cost to mine going forward? I know it's a little high right now, but you guys are definitely doing a much better job with getting newer machines in there, improving your joules per terahash. That's all improving. And then as you get more scale in, do you think those costs could possibly go down even more as time progresses?
Yeah, I believe we already lead the sector in lowest G&A per Bitcoin mine, but moreover, and we put this in our press release, our global average fleet efficiency is improving as we bring online more hydros, which are 15 joules a terahash. Yep. So once we're fully at 25 exahash, our global fleet efficiency will be 17.4 joules a terahash. We say 17.5. People don't like odd numbers. 17.5 joules a terahash blended fleet efficiency. We're at about 20 right now. So that's over a 10% improvement on global fleet efficiency. So that alone represents a 10% decrease in cost. And moreover, as our power in Paraguay is cheaper on average than other countries, we expect that to increase by another 5 to 10%. So I believe we have 15 to 20% by calendar Q4 this year. We're expecting our cost of Bitcoin and production to also decrease overall, all other things being equal, of course, by about 15 to 20% through lower average power costs and better energy efficiency from our ASICs.
Yeah, very nice. I think you guys started out the cycle after the halving event. You guys were at like 30 joules per terahash, roughly right around there, right? When you guys started out and you guys started refreshing the fleet.
Yeah, exactly. Because the King were 18.5 joules a terahash, and we've got S21 pluses, which are 16.5 joules a terahash. S21 plus hydros are 15.
So that's a very nice improvement over basically a year's time. You guys have done a great job.
Thank you. Yeah. We very much, and again, we did it ROI. We could have bought the S21 XP, or there's that crazy one, the UXP, that's like the rack mount one, but it's like super, super expensive. So I think, we're really happy with the ASICs that we bought on an ROI basis, because when you ROI successfully, then that's how you last in this game, right? Like if you run a scheme, if you don't make back your original investment, you're in the red, and like you've lost the confidence of your investors. Like I think like sometimes, like I used to joke that the rearview mirror is broken in this industry. It's like, wasn't that long ago where companies were going bankrupt, right? And so people were very clever leveraging the ATMs after, but nothing is forever. So just because people were able to scale and raise a bunch of money through ATMs, can you constantly rely on that to continue to fund the business if you don't ROI on your investments, right?
Exactly. You got to be able to get that ROI and be able to use the money that you're generating from Bitcoin to then fund your future improvements. Again, you got to refresh your fleet.
Refresh your fleet, even if you don't scale, and you've got 200-300 megawatts of ASICs, and you don't refresh you don't have the capital to refresh your fleet, you're going to be in trouble. What are you going to do at that point, right?
Pull more on the ATM, dilute shareholders some more. Right. I mean, what other thinking they do? One other question that I have here for you is, what do you think of the cycle? Do you think it's going to be a different cycle than we've had in the past with Bitcoin? What if we get an extended cycle? I mean, are you seeing similar things playing out that way where it might be different?
So I know the guys at the Satoshi Action Fund, they were doing a lot of campaigning. Tom McCarthy had reached out and mentioned that the 2 states, I think it was Arizona and New Hampshire, laws for strategic Bitcoin reserve. Yep. And the exact nuances, I think you could find online. Obviously, Trump has talked about strategic Bitcoin reserve. how exciting is that? He wants America to be a hub. But you know, it's one of those things. It's been years in the making, right? Like I remember being at Empower in Houston. It's a cool. I think you'd like it. It's an industry insider conference, energy driven, and there's a guy on stage calling. He was like, "Bitcoin's the American electrodollar," and I love that. You know, you think about how Bitcoin the U.S. dollar used to be backed by gold, and then it was sort of the petrodollar. And I believe it was a year or two ago, Saudi Arabia and Russia also transacted without the US dollar. So that sort of decouples. What is US dollar really backed by aside from its military? Well, guess what? Energy is with the backing of Bitcoin. That's what makes Bitcoin secure. That's what makes Bitcoin have real value. Is there's a cost to produce it. Yeah. Measure joules of energy. And you know better than anybody how to calculate the cost of the Bitcoin, which by obviously varies. It's a matrix. It's actually like a planar solution, but that's the thing about Bitcoin. And so I think now that at least at the federal and state level in the US, people are embracing that. I'm like, oh my God, we can utilize our stranded energy resources. You look at some of the value creation and economic rejuvenation in areas of the US that Bitcoin mine has created. It's great, you know. I've been to economically depressed towns. Aluminum smelters that got shut down by Metal, you know, the steel magnate. I remember it was in the Midwest. I was looking at an 82 megawatt site, and it was an old smelter. And so what happened was this one got shut down because, you know, he just wanted a monopoly and Metal went in there and bought like 5, kept 1, shut the other ones down. So like all the jobs disappeared. These towns have like no economic activity anymore. So I think Bitcoin mining is great that way. And so can it be an extended cycle? Can it be a new era of Bitcoin dominance? I think so. I think that there's more Bitcoin adoption more than ever. I mean, look, Bitcoin hit top 5 global asset by market cap recently, right? And it eclipsed Google, it eclipsed Saudi Aramco, it eclipsed Berkshire Hathaway in market cap. Right, it's a $2 trillion asset class. So we all know gold is number 1. It's eclipsed silver, right? So definitely, I think. And now you've got the policy framework in place. They know how to tax it. They know how to track it. Governments are comfortable. Law enforcement's comfortable with Bitcoin. So yeah, definitely. I certainly think it can be a prolonged cycle for sure.
That's kind of where I'm thinking. We'll see how it plays out, but I think we might be in an extended cycle where we do have these kind of 30% corrections in Bitcoin like we've seen last year. We saw it this year, and then we continue to go back up. But it's already different from where it was the prior cycles. We'll see on that one. And then the last final question from me, and then we'll get into the viewer questions, is any thoughts on opening up operations in the United States?
Well, we've got our head office at San Antonio, and we had a party recently to commemorate the launch of that. We'd love to do business in the U.S. Our chairman, executive chairman, Frank Holmes, is in San Antonio. That's why we opened the office there. Our marketing team, we have some staff members that are based in San Antonio as well. Our board member, Dave Burrell, he's in Minneapolis. So a lot of our board members and exec chairmen are in the U.S. We've looked at opportunities there. So stay tuned is all I can say. But, you know, for Hive, is if we can find clean power and our vision converges, then we're happy to build that sustainable infrastructure for the future.
Yeah, no, I agree. Let me see. All right, so I'm trying to find some questions here from the users here really quick, and I do apologize for the noise upstairs. My kids just got home, and the dog. Let me see here. Okay. I'm trying to get some questions here. All right. Sorry, I'm trying to find a question. Okay, here we go. This is from King Levy. He's asked, Hive's cost to mine at Bitcoin has been increasing. Are you expecting your cost to drop after the large build out? I think we already covered that. You said that you were expecting 15 to 20% reduction in that.
Yeah, and I would also add this, in New Brunswick, half our power is fixed and half is indexed, right? So you do have seasonably high power prices in the winter. And so right now we're seeing power prices in New Brunswick at 1 and 2 cents Canadian, right? So we're going to have much lower power prices. And New Brunswick is our current, notwithstanding Paraguay, our global footprint is 130 megawatts. Well, half of that is New Brunswick, right? At 70 megawatts. So, we've got our fixed power costs here, so 37.5 is fixed in New Brunswick. The balance is index. And right now, this for the last couple of months, it's been 2-cent power, right? So yes, we are, and we want to also limit that exposure to index pricing where it gets high. So we're looking at, okay, so if we can scale in Paraguay, and when it's winter in Canada, summer in Paraguay, well, it's all fixed in Paraguay. So we'll just reduce our consumption when the index prices are high in the winter, because we always have mined for maximum gross profit. Mm-hmm. So you have a day when it's power spikes, and let me give you a number, say it's 10-cent Canadian power on one day. And that's expensive, but if you can mine profitably, we'll still do it. And so it may make your margin or your average power cost look high, right? Yeah. But we're still profitably doing it, right? Because we track everything very much mathematically, right? Every watt counts when we mine Bitcoin. It's, we're looking at the certainty of math as long as, the conversion of energy to hash rate. But with the scale that we have in Paraguay now, we could reduce or load shed when there's high index power in New Brunswick. And in Sweden, we hedge, our power contracts, I think, are hedged at about 2.3 cents. Now, there is the energy tax that Sweden levied against all data centers. And so, our cost of power is a little over 5 cents in Sweden as a result of that.
And there's no energy tax in Paraguay, right?
Nope. It was a 2.9 cent tax that they levied in Sweden in 2022, I believe it was. But we used to have spot price in Sweden right now is 0.1 on one of our morning huddle. It was 0.1 cents a kilowatt hour. It's really, really cheap, And so, but we hedge. We have fixed 30 megawatts of fixed power, and above that we get index in Sweden. And so at 0.1 cents a kilowatt hour, you add the energy tax, you're still 3 cents all in. So still very attractive on the spot. And then the hedge power, the 30 megawatts, you're paying about a little over 5 cents all in.
Okay, perfect. Next question here, does Hive still own DFT shares?
Yeah, I think that's in our financials. Defi Technologies, I believe we do. Yeah. And it's the last disclosure, I don't have off the top of my head, but that's always covered. Usually Darcy covers that when we do our earnings webcast. So look to Mr. Darcy DeVers, longest standing CFO in the entire crypto mining sector. That's it.
Wow.
Darcy's the man. Yeah, he's been.
Congratulations to him.
2018. And Frank and I also have been the longest standing C-suite, either in a president or CEO role. Both Frank and I have been at the helm of a publicly traded crypto mining company since 2017. So, yeah, we're veterans, man.
You're OGs there.
Walk.
Yeah. Next question here is, at what price is Bitcoin required for Hive to be profitable after 25 exahash? So I'm guessing, what is the lowest price you guys could possibly be profitable with Bitcoin?
So we really look at, we don't necessarily, because it's on what assumption, right? So what difficulty, what network hash. So really, if you're at, so difficulty tomorrow is going to be at 121 trillion, right? The epoch adjusts tomorrow. It's going up roughly 2%. We're at 119 now. So just pick, I could tell you. So if we are at a global average, I'm just going to do this live for you. If we're at a global average of 17.5 joules a terahash, let's just say the network hash rate is difficulty 120, right? Difficulty is 120. Our efficiency is 17.5, and let's say our global average cost is, let's use a nickel. And if difficulty is 120, 40,000 of Bitcoin.
40,000 would be, guys, the lowest you guys would be profitable at.
Yep.
Nice. Yeah, that's awesome.
Yep. So, if Bitcoin's at 120, we're doing 65% gross mining margin. Yeah. So it's basically we'll be at hash price break even. What we do think of it as is hash price break even. So our hash price break even is like $20.
Okay, that's good.
Yep.
Okay, next question is from Yellow Gambler. He asks, "Are you guys hiring?"
Well, we have a very lean team. If you have like an exceptionally good skill set well, it depends, like what are your skills? And we really try to attract the best of the best when it comes to talent. We huddle over 9 time zones every day. So we have a high performance culture. It's not easy working at Hive. We really try to attract the best of the best. So if it depends what your skills are, hit me up on Twitter. I guess we have two-way dialogue. So really, if you got a superpower, let me know and we'll see.
Yeah, if you got a brain like Elon, they might hire Elon. All right, next question here is from Ryan. Do you want to get as big as miners like Cleanspark, Riot, or will you always prioritize profitability over scaling up?
Yeah, we will always prioritize profitability and ROI over scaling up. I mean, I think that there's a critical mass that we want to be at, which is big enough to be in, the indexes like Russell 2000 or some of the ETFs. And we will be there with north of $1 billion, really, is where we'll be. So that's a key inflection point for us. So at 25 exahash, we've had investment banking analysts run metrics where they're confident that we're in the $1.5 to $2 billion market cap range. And that's good enough for us. And then how creatively can we perform as a company and let fundamentals and profit and earning drive share price? And of course, having coddle, et cetera.
Yeah. I would agree with that. And then next question here is, let's see, we talked about that, about US plans. All right. What is the extended plan for Hive to be profitable after the 2032 halving? I think that's a too far away out of time frame to actually think about that right now.
Well, I mean, I can speak to it broadly. Our strength lies in steady growth. We're powered by clean energy, and we have an unwavering conviction. So, you look at what is your dollar per kilowatt hour revenue going to be? And so machines are going to get more efficient on a joule per terahash basis. Network hash rate, you're talking 2032 is 7 years from now. Block reward is going to go down from 6.125 to, I guess 3.0625. Block reward will get half, but what's Bitcoin going to be in 2032? $1 million. So it's just denominated in dollar per kilowatt hour because everybody has a cost. Think of layers of an onion, right? There's a finite amount of 2% power, finite amount of 3 cents power, 4 cents power, et cetera. So layers of an let's do this. Layers of an onion are expanding, and then you're going to have people that are running. Let's just talk in today's terms. So you have people that are running machines at 15 joules of terahash and 20 joules of terahash, and I'm going to put some stuff on Twitter that it's actually really just you can plot it mathematically as a matrix. What is your break even hash price, or what revenue are you generating per kilowatt hour, depending on your electrical price and machine efficiency. And everybody plays by the same rules. So there will be some quantum of profitability at any given point in time. And, we're counting exahashes now. Back when I got in the game, having 20 petahash was whoa, that was huge, And you made a lot of money back then with that. You could make millions of dollars with 20 petahash. So, it is getting more industrialized. But guess what? It's more secure. The network's more secure than ever, right?
Yeah.
So,
Yeah, I remember a time when the S9 was generating $35 per day for several months. It's fantastic.
Yeah, totally. Yeah.
So I totally agree there. And then, there we go. With the news of power, company financial issues hitting Bitfarms in Argentina, are there any similar concerns with Paraguay's site?
With the news of power, company financial issues hitting Bitfarms in Argentina. No, I mean, different countries, different jurisdictions. Argentina gets power from Paraguay. I mean, you're kind of going straight to the source in Paraguay. Ande is who we deal with. And I'm sure Bitfarms will figure it out. But different country, different jurisdiction. And it's just a different economic landscape. Like Latin America is it's like saying like, oh, are the forest fires in the Pacific Palisades going to affect, farmers in Idaho? It's just different. It's all U.S., but it's very, very different. Yeah.
Okay, well, that's great to know. And then we got one more question here. How many employees does Hive have currently, and do they intend to maintain or add new hires?
So our revenue per employee is 6 million. We employ contractors, right? So we have staff at data centers that are contractors, but our key employee count is under 20, and we have
basically like management is under 20, and then everybody else is below that.
Yeah, we have full-time staff, but that functions contractors. We don't want to be employers in whatever, like 5 different countries, right? And I think they asked, are we hiring? So, I think the latest addition to our team that's been well publicized is, there's been 2. So Gabriel Lamas is our country president in Paraguay, and then Carlos Anibal is our his deputy in Paraguay, and then of course on Buzz we have Craig Tavares, on which will be the sort of pure play AI HPC. So we're kind of bifurcating the revenue streams. Hive will be Bitcoin mining, powered by green energy, and Buzz will be our HPC and AI business. So those are sort of the key hires that we've made. But if you have a superpower, hit me up on Twitter. But we just don't go hiring people willy nilly. And we've got a very hardworking team. Our mission's clear, right? We want to maximize Bitcoin mining efficiency through hydroelectric power and smart capital allocation. And as part of that fiscal prudence is really just ensuring that we've got a team that embraces a high performance culture at Hive. So we haven't come this far by having like hundreds and hundreds of employees. I know some of our peers have, but look, man, when hash price drops, you want one.
But they also have, some of these guys have much bigger sites. I mean, they're talking about gigawatt sites they're building out, and they have their own teams on that doing that. So I kind of understand that a little bit, but I think it's also a little bit ridiculous at some point.
Especially at the corporate level too. You know what I mean?
Yeah. Oh, absolutely. And then Dynamite Uber's got a question here. Have you heard of the security budget ratio problem with Bitcoin, and how do you think it'll be solved? I haven't heard about that.
No, I haven't. I mean, I could try to Google it quickly. Security budget ratio problem. Security budget ratio problem.
That's a new one for me as well.
Bitcoin. Let's see what comes up. Do the halvings Bitcoin security relative amount of protected roughly half every 4 years? Transaction fees have not been rising enough. No, so I mean, like, what's going to happen eventually after 140 years? The block reward will go to 0, but it's going to be made up for by transaction fees, right? You have more adoption, more users, etc. And we've seen transaction fees rally to as much as 20 to 25% in the past. So that will all sort itself out.
Does it actually go to 0, or is it going to be just 0.0001 Bitcoin that you're going to get a block reward?
Well, that's a good. It's almost like Zeno's paradox. That's a good question. I mean, once the 21 million Bitcoin, which formulate the block reward, have been like there's a finite. I think the operating numbers says that all the block reward will have been issued by 140 years from now.
Okay.
And ultimately, it'll be driven by transaction fees. Yep.
Yeah. So we need transaction fees to happen, but I think that's going to happen over time as we get more adoption, more use cases for Bitcoin, more ways to transact with it. That will come in time. But until then, I don't really worry about it. I'm going to be dead, long dead by then. By that time that happens. But my grandkids might have to worry about it.
Yeah. And like the other thing, too, is like I like to think of brighter tomorrow, Bitcoin sound money. And I think that, with the Trump administration embracing it, it's, currency in El Salvador. It's crypto's illegal in China again. Russia's pretty big on it. Apparently, Bhutan mines. Sovereign powers are adopting Bitcoin as an asset class directionally. That's where we're going for sure. I think people just need to understand it better. But moreover, think of the technologies, right? You've got all the layer 2 stuff. There's no block reward in Lightning. People are utilizing transaction fees, etc. So I think once you've got these layer 2 technologies that will drive more adoption, and now you can put data. I can remember, was it ordinals and runes? Yes. Casey Rodamore, he was at Bitcoin Asia, and it really was cool about that. It's like, hey, we can now put data on the Bitcoin blockchain, right? So I'm going to provide an anecdote. Maybe your viewers will find this interesting. I was in wireless telecom as a radio frequency engineer. I remember being in the laboratory, and this is like in the mid to late 2000s. Everybody's using flip phones. Remember the Motorola Razr?
Oh yeah, I had one of those.
T9 texting, right? You just like texting with 9 keypads, and all you could do is like take a crappy photo and text it to people. That's it, right? And what we used to call that back then was GPRS, right? And that was 2G, and then you had 3G, and then you had 4G. So we're in the lab, and we're developing 3 and 4G technology. We do streaming video, and we're like, who's going to use this? Like a bunch of engineers. We're developing the technology. It's a super high tech lab. Like who needs this, right? This is like I would just ask myself, this is like for people in Japan that like watch TV on their phone. I don't know. Maybe they have some like fancy phones that can do that, and then boom, the iPhone came. Yeah. Everything changed, man. Behavior changed. The application layer came out. And so all of a sudden you had location-enabled services, Uber, Airbnb, and now society changed. So the movie called Blackberry is really good. It hits close home because Canadian engineering.
I watched it. That was a good movie.
So good. And remember that quote? They went from selling minutes to bytes, right? That's what happened, right? Yeah. You don't get billed for how many minutes you talk on your phone. It's how many gigabytes. And how many gigabytes are on your phone plan, Sebastian?
I have unlimited actually right now.
There you go, right? I think mine's like some crazy number, like 100 gigabytes. And like, remember, like 10 years ago, it was like megabytes, right? So now you've had this exponential scale. So I think that is where things are going, where one day, so we've got the rails, the technology is there to put data on the Bitcoin blockchain. And then eventually someone is going to think of something really practical and useful, and that will just drive more usage, right? And so guess what? You want to put data on the Bitcoin blockchain, it's not going to be a taproot wizard or some funny picture, but it might be a way to memorialize information. And what will you do? You'll pay for that access. You're going to pay transaction fees. So it's the ecosystem, man. Bitcoin is great.
It's awesome. I fell in love with it back in 2017, and I've been in it ever since. I hodl what I can, and that's going to be my plan going forward. Any concerns with quantum computing?
I was looking into that when I first got into the space. You could Google Shor's algorithm and Grover's algorithm, and it contemplates exactly that, because like you have SHA-256 is the cryptographic system behind Bitcoin, and so Grover's algorithm contemplates how many qubits you need in a quantum computer before you could crack SHA-256. And the number of qubits is like very large, and we're so far off from that. So I don't see that as sort of like an interim thing. And like the way like quantum computers work, like there's different ways. One of my buddies actually that I went to school with, I went to a school called SFU. We had an amazing engineering program. He's actually a senior director at Photonic now, so he works in quantum computing. But there's like different applications, and so I don't think directionally people are like developing quantum computers to try to hack SHA-256, and even if they were, the amount of qubits is so far off. I think there's other more practical things, and so short answer is no, but go read up on it. It's cool. I think you'll kind of satisfy yourself when you get a chance to read up on it. That's
sure. And it's interesting what the technology is there, what potential is for it as well. But I think we're still a ways off before it gets hacked or be able to hack Bitcoin. So I'm not concerned with it right now. We might be a little bit more concerned in the next 5 to 10 years. But right now, I think we're still okay with it. But there's always a way to remedy that. I think Bitcoin the developers have already came out with a plan to combat that if that happens. So I'm not too worried about it. And then probably you can't answer this one, but we're going to put it up there anyways. Aydin, I own 15,000 shares. Should I buy more? Right, not financial advice as always. You can't speak to that.
Well, first of all, thanks for being a shareholder. Bitchin82 is the username, I think. And thank you for your support. You know, I work for you, really. You know, I'm out here. I'm a shareholder. You're a shareholder. So I believe that we are undervalued. I think that, you know, smart money looks at Hive and you see our upside. You see that we've got more growth than anyone in the sector. 4x growth this year. We're executing. We're putting out regular press releases. You know, our strength lies in our steady growth, our unwavering conviction. We're powered by clean energy. And I think that, look, I wouldn't be working as hard, my whole team, we wouldn't be dedicated. Of all the things I could be doing, I'm doing this. So, you know, you've got our commitment and our conviction to doing the best job we can and driving the most value for our shareholders. So, you know, that's not me succinctly saying, yeah, go buy more stock, but I believe in our company. So, and we're working very hard.
I think you guys are definitely way undervalued from where you should be. And so that leads me to another question that I kind of have is, why do you think that is? Why is Hive so undervalued from possibly its peers? And then also, would it be a good time to possibly buy back shares?
Yeah, so a couple things. So I think all those converts that were done in November, which we did not do. We didn't do the expensive debt in 2022, and we did not do those convert deals because those are really like long short. Those were mechanisms for long short hedge funds, right? So like nobody is buying that convert for 1% coupon. It's like they're going short, right? This is a mechanism for hedge funds. You know that. Like we talked to all the banks. They told us the whole playbook. And it's read all the press releases. It's all there, right? Cap calls and I'm out of frame. Cap calls and because you got the border too. That's why cap calls and share buybacks. Like so, you know, for example, like you know, somebody was like, "Oh, we did not Hive." I'm talking about our peers. These other guys, they do $650 million convert, 1% coupon, 40% conversion premium, or whatever, something along those lines. Okay. And they're like, oh, but by the way, we spent like, you know, a couple $100 million doing share buyback and cap calls. So our net proceeds is only $400 million. So they're going to have to pay back $650 million. They got $400 million to buy Bitcoin at its peak. And so what does that do? It just creates a bunch of shorting pressure. And there was I think it was like $5 billion these converts done. Like too much paper was out there. And then, you know, you look at the collective market cap of the sector, it was like 20 billion at the time. And everyone's down like half of what their stock was in December, despite hash price being the same. So what does that tell you? There's immense amount of short. And it affects us negatively too. Even though we didn't participate, they short us as a proxy for the other companies. They short the industry as a basket, right? And I think when it comes time to pay the piper, you know, it could be massively diluted for those guys unless Bitcoin goes on a crazy run and, you know, they're able to convert. But really, I think it created a lot of shorting activity. The other thing is getting to critical scale because so much of our peers, I mean, it's no secret. You got the Maris, Riot, Cleanspark, and we see all these guys at conferences. Like, you know, we're all industry peers and colleagues in the sense. You know, we all go to the same conferences, we chat, and you know, I think everybody is doing their own thing. But there a lot of value I think is ascribed when you have indexing and passive buying. I think that's really what's emerged, and that's helped a lot of companies see their stocks do really, really well. And so it's us getting that scale. And to qualify for some of those indexes like Russell 3000, you've got to be either U.S. domicile, you have U.S. assets. And that's why we took the direction to relocate our head office to San Antonio and look at how do we have those more passive. We used to be very retail driven, right? Back in the right? And, you know, it's great. Like, I wonder if the Bitcoin mining mafia is dialed in. I saw you posted it there, and a big shout out to those guys. But you know, a lot of it is, I think, indexed. And you know, we'll meet Van Eck when we go to New York, and they do have a discretionary fund now. But prior to that, it was just passive, right? Like it was algorithm driven. So getting on that flywheel, I think, will really help our valuation.
And I think you guys' growth here is excellent this year. I think that maybe hampered your guys' performance in the past. You guys were only looking to get to about 1% of the network hash rate. Now you guys are going to be like 2.5, maybe even 3, depending where that network hash rate goes. I think that also helps because historically, you guys, as far as percentage of shares shorted of your guys, it's been pretty low. It hasn't been as high as some of these other guys that have these convertible debts and things like that recently. So that's the only thing I can think of why you guys haven't been as loved maybe by the street as some others because of possibly your just lowered growth. But now you guys are growing tremendously. Love seeing that. So I got a couple more questions here, and we'll call it a day. Let's see. Dynamite Uber asked, do you hold any altcoins like Ethereum? I know you guys were obviously mining a lot of Ethereum in a day. You guys were holding it for a while. Have you guys sold all of it, or you guys?
Yeah, that would show up if we had it. No, we don't. So we were a large Ethereum miner, and once ETH went to proof of stake, we were out. Like, we don't believe in that. You've got staking cartels. It's just, you know what I mean? Like, I'm not a fan of Gary Gensler, and I'm very glad he's gone. I'm sure everybody that's dialed in is glad he's gone.
Oh, absolutely.
But, you know, he was making a case that I guess he was trying to make Bitcoin a security, so which is not, it's digital property, it's a commodity. But I think, you know, there's a Howey test, right? It's like, is it a commodity or security? And so, like, Bitcoin clearly is a commodity, but like when you are staking something, it's sort of like if you and me want to go make like, you know, our own coin, I don't know, call it whatever, Sebastian Aydin coin. I'm not a marketing guy. And like we just go print a billion of them, and then we airdrop them to our friends, and then we start promoting them. And what is that? It's like promoting a security. It's like promoting a stock, right?
Yeah.
And then you're like, oh, but then give it back to us, and then we'll give you yield. Well, this is like, so it's like, no. So short answer, no. Short answer is no. Bitcoin.
I'm all for Bitcoin. I have some Ethereum as well, but it's a much smaller position than what I've had in the past as well. And Ethereum hasn't done as well as Bitcoin has. So maybe that's something telling there going forward as well.
Bitcoin CEO, it's truly decentralized, it's energy bad. Obviously, we're proof of workers. Ethereum, you know, you got the Ethereum Foundation. You know, Vitalik ostensibly doesn't control Ethereum, but come on, right?
Yeah. He's got input in there. Yeah. All right, Aydin, we've gone almost 2 hours here, my friend. I greatly appreciate you coming on here. Anything else that you want to let the viewers know, investors, anything that you guys have plans, anything at all?
You know what? I just think, like, stay tuned. Our team is working incredibly hard. I'm very proud of everything. You know, I think 2025 is going to be the year of Hive. It's a 4-year overnight success, and I think our team has really come together. We just navigated so many twists and turns in the market, and it's just stay tuned, you know. And we're going to have some great press releases coming out. I'm really excited about. I'm going to go to Paraguay 3 times this year. I'm going to go down in June. I'm going to go down in September for a YPO event, and I'm going to go down in November. That's their national holiday. So, you know, our mission's clear. We want to maximize Bitcoin mining efficiency, powered by hydroelectricity and smart capital allocation. And, you know, let's look forward to like a real bull market, $150,000 Bitcoin. Sebastian, where are you based, actually?
I'm based in Illinois, about an hour and a half of Chicago, west of Chicago.
All right. Okay, cool. Well, if you ever go to a conference, it'd be great to meet you in person.
Absolutely, yeah.
We travel a lot, and we got to get a selfie. But we got to get you a Hive hat. Got to get you a Hive hat.
I'll take any kind of merchandise from anybody.
Yeah, for sure.
I've got offers from everybody else. I just, for whatever reason, I just don't want to have any improprieties, I guess you could say. So I draw that line a little bit there. And also, just one unrelated question here to Bitcoin and Bitcoin mining. What are your hobbies?
I have a black belt in kickboxing. I try not to spar, so I'm getting into tennis, like non-combat sports, but I spent 11 years, did some tournaments. I like being on the wall. Sorry?
Could you kick Joe Rogan's butt?
Depends. I mean, I could probably hold my own sparring with him. I'm a heavyweight. I like weightlifting. I do a lot of HIIT classes now just to keep the cardio. You know, like because we have a high performance culture at Hive, you know, sometimes it's long hours, multiple time zones. It can be quite visceral. So I like to just keep my body and mind in tune. I'm into biohacking. I wear an Oura ring. I love, Peter Attia, the Huberman podcast, all that sort of stuff. Like, you know, we're like performance athletes. We're like corporate athletes, right? So how awesome can I be? I love doing what I do. It's super exciting. I'm passionate about it. So just want to be the best version of myself for my family, my friends, and shareholders. So yeah, those are the hobbies.
Yeah, absolutely. Well, that was great. Aydin, thank you so much. Everyone else, thank you so much for coming in here, the questions, everything else. Really appreciate you guys. Really appreciate you and Hive for spending the time with us, almost 2 hours. That's unbelievable. I thought we'd get maybe half an hour, 45 minutes, but I greatly appreciate it. And thank you, and thank you, everyone. I'll see you guys in the next one. See you guys then. Bye.
Thanks, everyone.